You are listening to C-Suite Perspectives, a podcast by the Conference Board.
Welcome to C-Suite Perspectives, a signature series by the Conference Board. I'm Steve Odland, the CEO of the Conference Board and the host of this podcast series. And in today's conversation, we're going to talk about financial literacy, credit access, and leadership. Joining me today is the perfect guy to talk about it, Brian Wenzel, the CFO of Synchrony. Brian, welcome to the program.
Steve, thanks for the invitation and glad to be here with you today.
Brian, tell us a little bit about Synchrony, and not all of our listeners may know all of the things that you all do.
Yeah, Synchrony was spun out of General Electric a little over a decade ago, but our history goes back over 90 years. We started financing refrigerators in the Great Depression, so we know a lot about retail underwriting and helping consumers out through difficult times. And today, we're over $100 billion in assets. We're the largest unsecured credit card issuer in the United States of America by number of accounts. We have over 70 million accounts. So you think about that relative to the number of Americans. And we are one of the ones that are really diverse with regard to the credit spectrum we deal with. So we deal with people who are more challenged credit to super prime credits. And we span across multiple different verticals. We're just there to help consumers live their lives and hopefully improve on the way in which they go about it.
Yeah, the joke about banks is that if you don't need money, they're right there for you. But Synchrony is different. You are providing credit access, as you said, going back to the Great Depression and helping people buy appliances, down to microcredit and helping people who really are in need.
Absolutely, Steve. We have stories. Think about some of our verticals. In our health and wellness vertical, we do an awful lot in the veterinary space. And when you have someone who has a dog, let's say, that gets injured and you go in to see the vet and you have a couple $1,000 procedure that has to get done because maybe the dog broke its leg, taking that financial burden off somebody and allows the pet parent to really focus on the health of their pet is really bonding experience, or that ability to finance diapers for a new mother to be or a new mother. So to be there at every step of the journey for consumers is really a rewarding space to be in.
Yeah, now obviously this isn't the 1930s and we're not in a depression, but there still is a lot of need out there. And so access to credit is critically important in today's economic climate, right?
Yeah, Steve, it's interesting as you look at Americans, there's a large number of Americans who don't have credit scores, who appear to be invisible in the system. So it's really important to help people get access to credit. And that's really good for them because then they can go about their lives and really engage in the economic prosperity of the country. Going a little bit deeper, Steve, there's 45 million credit invisible people, as I talked about, that are out there. And without having access to credit, without building credit, they're not going to have the ability to get mortgages and do things or just go about some of the things in the American dream that we talk about. And even beyond, what I'll call credit invisible people are people who actually come to this country. And you may have lived in Australia, you may have had a house, you may have had credit cards, you may have had cars. You come to America and you have no credit. So the ability for us to really look through people that have no scores and to be able to get alternative data in order to evaluate their creditworthiness really can help the consumer at the time in which they need to access the financial system. And in allowing people to access that financial system builds their independence, builds their stability inside our country.
Yeah, now there are a lot of bad stories out there about payday lenders and people who take advantage of these underbanked and people with lack of credit, which is why it's so important for organizations like Synchrony to be there. Talk about the options out there and how you guys really rise to the top.
Yeah, so I'd say just under a decade ago, Steve, what we've decided to do was pivot away from what I would say is a very traditional type of underwriting model. If you go out today, people always hear about your FICO score, your Vantage score. I'm sure most people who have credit cards can see what their score is online. They have free access to the credit bureau reports. But that was a very traditional way in which you had several companies create a proprietary model and effectively rate you. What we decided to do was to pivot and not necessarily be as reliant upon those models. Yes, in an underwriting decision, we get those scores and those models, but we also go beyond that. Back again, 10 years ago, we used to have 100 attributes that we would use in order to make a credit decision. Today, that's over 9,000 to make a credit decision or open a new account. And this data Steve, is data that we may have experienced something with you before with one of our products. We go out, we get things like your utilities payments, other things that you have on the public records to bring those in. And so we take that information and say, okay, I'm not going to rely solely on that score, but I'm going to look at your holistic way. And your credit score may be low, but we actually think you're a pretty good credit. So therefore, we're going to treat you better than what your credit score would indicate. This is our advanced underwriting system we call Prism. We've invested a ton in it. We try to get as much data so that we really can analyze the situation and make the best decision. Because what we want to do is empower people. And Steve, you talked about payday lending. What you also want to be is a responsible lender. So give someone the right access to the right amount of credit at the right time. We don't want to overextend people, nor do we want to be too cautious where we don't give customers credit. In our model, we generally go to market through our partners. So this ability to use all this information and different forms of information is super critical because I'm not choosing someone. You may walk into a TJX store this afternoon, apply for credit. You may go on PayPal tonight and apply for credit. I don't know, but I get all this information. I have to make a very quick decision with regard to credit. So it's really important to our model, but it's more about trying to look at the individual differently than what had historically been done.
So with 9,000 different data points, you must be making heavy use of AI and all the recent technologies.
We have used machine learning. The interesting thing, Steve, right? Everyone talks about AI and particularly with generative AI now, but we've always used machine learnings and models that constantly update itself, particularly even when it comes to fraud, when it comes to how people perform, we're constantly taking data. Again, if you think about 70 million average active customers a month, we have a ton of different data. So we have enormous data sets that allow us to build really responsive models so that we can be a responsible lender.
Yeah. No, and you've got some examples of cross-sector collaboration, which is making equitable access to credit more even. Talk about some of those approaches.
Yeah, there's one that's called Project Reach, which stands for the Roundtable for Economic Access and Change. And this is really a public-private partnership, not a partnership in the true sense of the word, but a project where the OCC, the Treasury, and a large financial institutions, including Synchrony, are using alternative data, particularly cash flow data, in order to evaluate a consumer's creditworthiness. And over the course of this project, we've actually originated over 100,000 net new accounts, which is more than all the other banks combined. It's one where we probably embraced it a little bit more, but it's really an initiative when you think about our regulators, the Treasury, and broad base, all of us sharing data together between those large financial institutions and ourselves in order really to help individuals who are credit invisible, but really are very decent credits. We just need to give them the opportunity to provide some incremental data to establish that.
Yeah, now the world of finance and credit just seems to be getting more and more complex, particularly for consumers who are not in the industry. And hence financial literacy is important. And particularly now when when you have social media and you have the electronic means of players getting involved. So talk about the importance of financial literacy as it relates to credit access and economic mobility.
Yeah, Steve, it's amazing the proliferation of the number of different financial institution products that are out there that at times can be overwhelming to individuals. But really, when you get down to it, it's really that access to credit, the ability to have economic mobility, and financial literacy are all really linked together. And in order to do that, you have to provide them information, tools in which they can use at their own pace, to be honest with you, so that they can manage debt wisely, they can save and potentially invest wisely. So it's important to provide information out to your consumers that allows them to consume that information and get educated on it. And this is really important for building a bond. You talk about banks, you talk about financial institutions. One of the cores of that is trust between the consumer and that institution. And you build that by providing them the proper tools in which they can manage their lives. We're not trying to just get people to borrow money from us. We're really trying to build a long-term lasting relationship, which creates greater lifetime value for our firm.
Yeah, and all of us have been subject to those pages and pages of tiny mice type boilerplate, but you do it differently and you put it in common English for people.
Yeah, try to, because we want the consumer to understand the product they're getting. We want them to understand the terms and conditions. We want to be as transparent as we can. That is the method in which we operate. And we want to make that process not as scary for people, particularly those who are newer to credit. You just don't want to confuse them and have them sign up for a product they don't necessarily fully understand. Complying with the law, most certainly important, but making it clear and transparent is really important thing that we value at the company.
Yeah, and it's in everybody's best interest and for them not to get over their skis in credit or over their heads because that doesn't end well for anyone. So it's really important. So it's so much common sense what you're doing to try to make it very plain and understandable. But there's a role here for employers too, I would think, that to get involved in helping people learn more and gain financial literacy.
Oh, absolutely, Steve. We talk about wellness as employers. Wellness is multidimensional, right? You have financial wellness, you have physical wellness, you have your mental health that goes in there as well. And what we always say is that if you are not in a good position on any one of those three levers, it is really difficult to come in and perform at the highest level inside the company today. And so it's important to provide benefits to people along those lines. Historically, we always thought about the role of providing benefits as really insurance, right? It goes much beyond insurance today. So it's providing them access to savings, providing them access to financial planning, whether that's directly through yourself or, to be honest with you, through partners. We partner with Fidelity with regard to some of our benefits programs and making sure their content is available to do that. So it's really looking at the employee from a more holistic perspective and understanding that wellness isn't just defined as your physical wellness, but it goes both to the financial aspects and most certainly the mental health aspects.
How do you tell whether your customers or your partner's customers are financially literate or what metrics do you use that show that you're making progress?
Yeah, as you provide tools out there really that the customers can engage with, one of the things that you do is you put simple, I hate to use the term test, Steve, but put tests out there, engage whether people are going through different modules and how they're doing. It's something you can track over time. It's something you can track different cohorts. It's something that we don't really do this today, unfortunately, because for discrimination reasons, but you'd like to understand between Gen Zs and baby boomers. We have a tremendous mix here. So having the access where you can test people as they go along to see if they're getting it. And to be honest with you, Steve, you can actually make it fun. It doesn't have to be like you're in college and you're reading a textbook. You can almost gamify it a little bit. And the consumers really engage that and like that. It doesn't make it as intimidating for them to engage with.
We're talking with Brian Wenzel, CFO of Synchrony. We're going to take a short break and be right back.
What does the future of work mean for your employees? How will your company navigate ESG? Will there be a global recession? At the Conference Board, our experts translate the latest research and economic analysis into insights and real-time problem solving for your organization. Membership at the Conference Board provides your team with an assortment of knowledge from economics, marketing and communications, ESG, public policy, and human capital. As a member, you'll have access to our center experts, member-exclusive events, data and benchmarking tools, and peer sharing that will help you understand the present and shape the future. Consider becoming a Conference Board member today by visiting www.conference-board.org.
Welcome back to C-Suite Perspectives. I'm your host, Steve Odland from the Conference Board, and I'm joined today by Brian Wenzel, the CFO of Synchrony. So Brian, in the first half, we were talking about financial literacy and credit access and all the great things that Synchrony is doing. In recent years, we have seen a lot of shift to focus on the importance of workplace culture as a driver of organizational success. And clearly, you and your colleagues are very proud of the culture at Synchrony and what it drives in the community and what it drives for your customers. Talk about that.
Yeah, Steve, we could probably take a whole podcast on this particular question. So let me dive in a little bit. The first thing, and what makes Synchrony a different financial institution than others, is we are very value oriented and purpose driven. And that creates much more of a family like setting. And when we talk about values, there's a lot of companies that put values up. They're on screensavers or you get notepads. But we really go beyond that. We take people, we define what those values are, but we also tell them the how. Like, how do you display that value every day? And I think when you live, operate, and reward based upon those values, I think you have a much more engaged set of employees. I would say, Steve, there's been a big pivot. We are fortunate. We just got rated number 2, great places to work, or best place to work in the US by Forbes and great places to work. We're number 1 in the Philippines and number 2 in India. And part of that is do you evolve as a company as it comes to your people? And let me give you a couple examples, Steve. We came through the pandemic, and if we all remember back to March of 20 when everyone went home, our employees told us a couple months in that they wanted to work from home. They wanted to have the ability or the access in order to have hybrid working. So we changed our business model and we allowed people to have hybrid working. You can come into the office or you can work from home. So this way they can be there when their son or daughter gets off the bus or be there when the Amazon package comes or do whatever. And we haven't lost any of our productivity or creativity with regard to that. So that's one example. The second was we transform our performance management process. Again, there's so many hours that were spent doing a formal performance evaluation, putting it into the system. And then you have these conversations and people were more caught up with words on a piece of paper than they were about the content. So we narrowed down the specificity of the document. So it was only a couple of bullet points that may go into the system. But what we did is we said, okay, every quarter we want you to have a conversation with your employees and your team. And so we have richer, better performance management feedback. We also just went into a whole separate exercise around career experiences and doing that. And then finally, to be honest with you, Steve, we've invested quite a bit on total wellness and benefits. We have sabbaticals. We have an on-site psychologist that's here you can make appointments with. We treat the employees in a different way because we understand the world's changed over the last 5 years and we need to evolve with them. So those are just a few examples of how I think we try to embrace the employees. It's still a very competitive world. We're a very competitive company, but we approach it a little bit differently through our values.
Yeah, and it doesn't happen accidentally. This it is a very deliberate thing, as you've noted. You've taken some very deliberate strategies. You sit in the C-suite, and I know that you engage in these conversations. You obviously engage your board in these conversations. What should other senior executive C-suite folks be thinking about if they want to move their culture and become a great or the best place to work?
The first thing is you have to be active listening. You have to be an active listener, right? You have to have that ability to engage the employees in a manner in which they feel it's a safe space and can provide real and honest feedback to you. You talk about boards, Steve. We're one of the few companies that allows our board to engage directly with employees of the company without us present. So things aren't scripted, things aren't prepared, but we allow them to come in and embrace the teams. And that's really important when you have that. So transparency is big. You think about what we went through in the pandemic. We started a call called Ask Us Anything. We started in April of 2020. We had a phone line anyone in the company can get on, and you can ask any question unfiltered, right? And to be honest with you, back in April of 2020, there were some questions asked that we said we don't know the answer to. I think that built a bond with the employees. So that active listening, that transparency with your employees, and really the caring. You go back, empathy has become this word that we use quite a bit in business now, but it's really that leading with vulnerability and accountability. And it's so important when you do that because you create trust and a bond with the employees that they will follow you in times of stress.
Do you think it helps that Synchrony is a relatively new organization? Yeah, it's nearly 100 years old in one sense as part of GE, but it's relatively new because you could reset, you renamed yourself, you repositioned yourself, you had new leadership, a new board. This is a decade ago or around a decade ago. Does that help to take this organization and reset it and refocus it?
Yeah, it allowed us to really focus on the culture we wanted, right? When we were side of General Electric, it was a very established culture. And when we separated ultimately in 2015, what we did is we took the aspects of that culture we liked and we left the aspects of the culture that weren't necessarily ones that we embraced. So we were allowed to do different things. We do things differently here when it comes to benefits. So it does allow you to reset. That doesn't mean you have to have a name change or a separation in your organizational structure to do it. You have to have a conscious effort to say, what do you really value as a company? But the important thing, Steve, is that the leaders have to walk the talk, right? You can't just say, okay, we're going to change the culture, we're going to do this. It has to be something that everyone embraces on the leadership team, and that you demonstrate that through your actions every day.
Yeah, but it's not impossible to do in an organization that's been around a while. But you have to, as you said, you have to do it deliberately, and you have to grab people by the lapels and go, okay, we're going to do something, we're going to shift here, we're going to take a turn here. In other words, you can't just do it one little drip at a time and expect the kind of results. So you had the ability to do it because of an event, but other companies could make an event to make it happen as well.
Yeah, absolutely. It goes down to focus on what you want to be and how do you want to engage with your employee. The ultimate thing with being a leader is how do you engage the team to make them high performing, right? Number one, they have to understand the purpose and the mission. Number two, they have to be connected and understand where they fit in that purpose and mission. And number three, they have to have trust. They trust the people to the left or the right of them. They trust the leaders. That's what it's about. And I think at times organizations get lost because they think people understand the mission or understand the purpose or understand their role, and they really don't. And that linkage to the mission and the purpose is much more than just a task you do or a process you lead or an activity that you oversee. It's really about how do you create value. And value is not necessarily for the company, but it's really for society and the economy of the United States.
Yeah, and the world has changed, as you said, and it's constantly changing, but the world of business has changed pretty radically in the last 30 to 50 years. It used to be pretty hierarchical, pretty tough. And in the retail industry, we used to say, look, if the boss kicks the team and the team's going to kick their team, and the last person that gets kicked is the customer. As a customer in a store or in that kind of environment, what the culture is, because you feel it, because you are the end recipient of this. And clearly, you all have done something different. You've done it just the opposite, which is you started with taking care of your employees, but that then cascades down, and your customers are cared for in the same fashion, right?
Yeah, absolutely, Steve. And I think the more you treat the employees with respect, transparency, show that you care about them, the more that they care about the company, are willing to go further for whether it's our partners, our merchant partners, providers, or our customers. When you look at, and one of the things we look at as a measurable out of this, Steve, is when I look at the attrition rates, either in non exempt or exempt populations, they're half of what they were a decade ago. And so when you have a great place to work, when you're showing that you care about employees, when they feel valued about what they're contributing every day, they're more likely to stay on. When I look at applications for new roles, they're higher than they ever been because people value the company, they value the culture. And that's where I think organizations need to understand that this is an investment, and this investment can have a very high ROI.
Yeah, so as you look ahead for your industry, what do you see as the most pressing opportunities and also the risks that shape consumer finance?
Listen, there's a tremendous opportunity here. There are so many people who need access to credit, and our ability to create access to credit for those individuals is incredibly important to our economy, number one. Also, on that opportunity side, we have over $70 billion of deposits, so that our ability to help people save and give them financial products so that they can grow their personal balance sheets is really important. And there's so many small and mid-sized businesses where we can be over 50% of someone's sales. And businesses are started every day and they grow, and some grow to the size of Amazon, some don't. But being there for those merchants is a really important part of what we do. But as far as risk goes, there are so many moving variables now, Steve. When you think about the economy and the changing nature of what's going on here in the US, whether it's immigration policy, tariffs, things like that, there are a lot of risks where the economy can be a little bit at times uneven. And so what you want to be able to do is make sure you're dynamic enough to respond to that environment. But it's really important for us to listen to our consumers, watch their behavioral patterns, and figure out how we can help them through any of these times. It was amazing to watch individuals through the pandemic period and the post-pandemic period, and now they're going through a different thing. When you have inflation that was 9%, it clearly weighed on a lot of families, but they managed through it, and now we're going through another realm of change, and we'll continue to be there to help them on their journey.
Just wrapping up then, any last thoughts, advice that you have for other companies who would love to have the kind of culture and success that Synchrony's had?
Steve, I said it a couple of times in this, transparency and active listening with your employees is really important, and valuing what they do. There's so many companies that say you have to go back to the office 5 days a week or this or that, and they view that that's important to the culture. What's important to the culture is what you value and what you allow them to bring to the table to do their job every day and feel like they're making a contribution to that mission and purpose. I think if you could do that, and we demonstrated this through the pandemic, that you'll have people who are create a bond for you that will go above and beyond for all your customers.
Brian Wenzel, thanks for being with us today.
Steve, it's my pleasure. Thank you for the invitation.
And thanks to all of you for listening to C-Suite Perspectives. I'm Steve Odland, and this series has been brought to you by the Conference Board.
You have been listening to C-Suite Perspectives, a podcast by the Conference Board.